Understanding buy limits and sell limits in Forex. As we saw in the previous video about buy stop and sell stop, traders place pending orders on their assets. And when the price of the instrument they are trading reaches the pending order, the order is executed. Apart from buy and sell stops, the other two popular pending orders are the buy limit and sell limit. A buy limit order is a pending order to buy a currency pair at a price below the current market level. A trader places a buy limit order when they believe that a currency pair's price will decrease to a certain level before reversing and moving upwards. The trade is triggered only if the price drops to that specified level. For example, the current price of Euro/US is trading at 1.2000. A trader sets a buy limit at 1.1950, expecting that the price will dip before rising again. The buy order activates when the price falls to 1.1950. A sell limit order is a pending order to sell a currency pair at a price above the current market level. A trader places a sell limit order when they believe the price will rise to a certain level and then decline afterward. The trade is triggered only if the price increases to that specified level. For example, the current price USD at JPY is trading at 110.00. A trader sets a sell limit at 111.00, expecting that the price will rise before reversing. The sell order activates when the price reaches 111.00. The difference between buy and sell limit and buy and sell stop orders. The key difference between limit orders and stop orders is: the limit orders is a pending order to buy or sell at a specified price better than the current market price, while the stop orders is a pending order to buy or sell at a specified price worse than the current market price. The buy limit order is placed below the current price and activated when price drops to the limit level, while the buy stop order is placed above the current price and activated when price rises to the stop level. The sell limit order is placed above the current price and activated when price rises to the limit level, while the sell stop order is placed below the current price and activated when price falls to the stop level. So, understanding when to use limit orders and stop orders helps traders plan precise, strategic entries in a variety of market conditions. That's all about buy and sell limit. Thank you for watching. Stay awesome and keep tuning in. See you in the next video.